Hello all, welcome back to Junior Wealth Builders. Today we will be covering the topic of the Federal Reserve and what it's about. So what is the Federal Reserve? The Federal Reserve is known as the central bank of the United States, but is independent from the three main branches of government: executive, legislative, and judicial, as they make monetary policy decisions in public interest, and they are independent from party. So, what does the Federal Reserve do? The Federal Reserve controls key interest rates for the public by buying and selling government bonds. When the Federal Reserve buys government bonds, they are ultimately adding to the bank's money availability, which lowers interest rates by encouraging spending because of the extra money the bank has to lend. Hence, by buying government bonds, the Federal Reserve is lowering interest rates and hence encouraging spending and borrowing. This is why more people take out loans for new cars, homes, and when the Federal Reserve lowers interest rates. However, when the Federal Reserve sells government bonds, the bank pays the Federal Reserve from the bonds, which removes money from the bank. Hence, banks will have less money to lend out, and the Federal Reserve is increasing interest rates, discouraging spending and borrowing. This is why less people tend to take out loans when the Federal Reserve increases interest rates, because they will have to pay more in interest rates. These decisions made by the Federal Reserve, increasing and decreasing interest rates, impact inflation rates by changing the demand. For example, more people will be in the market for a new house or a car when the Federal Reserve decides to lower interest rates. Therefore, when more people want these big ticket items, the price of these items will naturally increase because of the increase in demand. On the other hand, when the Federal Reserve increases interest rates, less people will want to buy homes or cars. Hence, the price of these items will slowly decrease to encourage people to buy these items because of the decrease in demand. That's how the Federal Reserve indirectly impacts inflation. So here's a summary of the Federal Reserve. The Federal Reserve is an independent body from the federal government that works in the public interest. The Federal Reserve directly impacts the interest rates by buying and selling government bonds, which helps manage and regulate inflation indirectly. Thank you all for watching this video. If you like this video, please make sure to subscribe for more informative and descriptive videos like this one. Have a nice day.